Yeah, so the poll is on. Like I said, information recorded, received, and maintained from a business activity is known as finance. Business record. None. Cost for producing a good or service is known as production cost. True or false? Profitable business is called gross profit. Net profit. Maintaining proper records is not important for a small business. Correct? Incorrect? To avoid silly mistakes, it is not a reason to have a business plan. True or false? A document that convincingly demonstrates your business idea is a business record, a business plan, a business cycle. Elements of business plan includes business record, business finance, all of the above. Monitoring is important in business daily activities. True, false? Business assets are what the business owes. True or false? Financial management is important in the business for the following reasons, except capital reserve, dividend decision, acquisition of fund, none of the above. So we have 4 people who have voted. That makes it 22%. You can continue voting in the poll so that the trainers are able to understand the kind of audience that we have. 26% have voted. That's a good number. Let's continue giving the votes on what you think about those different aspects of entrepreneurship. 37%, yeah, 23% to go, and then 42%. Excellent. Let's continue voting, and then we'll just do that. I'm going to share the link to the Zoom session, to the YouTube live stream, so that people who are facing issues following it on Zoom can actually follow it on YouTube, because YouTube is less of a hassle than Zoom. Yep. So 60%. Yes, we have reached 6%. 1 minute left, and then we will kickstart the session. 1 minute left, and then we will kickstart the session. 1 minute. If you haven't voted,
I'm not seeing the question.
maybe, sorry. If you are not seeing it, sorry. Maybe probably there's a problem for your ends. But later on, the trainer will just take us through the same thing. Don't worry much. 30 seconds left. Yeah, 62%. It's a good one. 62%. Okay, yeah, our time is up. So let me end the poll, and then launch the results. So here is the results. 70% of people have voted. Yes, Karaba, are you seeing? You can maybe just take us through briefly. Karaba, are you seeing the result?
Yes, I'm seeing the result.
Okay, you can take us through.
Thank you all for going through all this. I can see that all these participants, they have the knowledge for this session that we are about to start. So in the first question, we have information recorded, received, and maintained from a business activity is known as. We have only 2 choices here: finance, business record. That is correct, and all of them have taken that as the answer. In the second question, we have cost for producing good or service is known as production cost. True. Yeah, all of them are also taking that as the right option. Question 3, profit of business is called gross profit. Others are saying net profit, but the right answer here is net profit, because for gross profit there are other things that still need to be deducted from that, like what we call the indirect costs. They are supposed to be deducted from there, and then that is when it will drive us to the net profit. Number 4, maintaining proper record is not important for a small business. And many of the people are saying it is incorrect. We say it's true. We say whether the business is large or not, you must maintain those records. Number 5, to avoid silly mistakes is not a reason to have a business plan. To avoid silly mistakes is not a reason to have a business plan. That is false, with almost 67% have given right answer. Number 6, document that convincingly demonstrate your business idea is A. We have business record, business plan, business cycle, and the majority, that is 80%, has gone for business plan, which is the right answer. Number 7, elements of business plan includes business records, business finance, all the above. So here we need to understand it properly. So actually, this question has got some errors, but it is good that you have chosen all the above, which may be fixed there, but it is not specified. Number 8, monitoring is important in business daily activities. True or false? The right answer is true, which all of you have taken. That is 100%. Business assets are what the business owes. This is now the contradicting question. Business assets are what the business owes. So when you owe something, which means it is something that belongs to somebody and it is not yours. So the right answer here is false. Financial management is important in business for the following reasons, except capital. Financial management is important in business for the following reasons, except none of the above. So the right answer is the last one, none of the above. And I can see here the majorities are taking capital reserve. We are doing financial management in order to see whether we have capital reserve or not. So that marks the end of our poll for today. I think we can get back now to our main discussion of today's session. Thank you so much. We now have about 29 participants in this session. So I believe all of you are getting me clear. So our today's session, that is session 2 of this training, we are going to look at financial management and business plan. It is done by Emmanuel Karaba Ezra, as I introduced myself before. Sorry for this interruption made on the screen. So the presentation is going to be done by Emmanuel Karaba Ezra, and going to the contents of this program. We are going to look at these contents here under financial management. We are going to look at the definition of finance and financial management, importance of financial management, sources of business finance, business records and the types. Then we have preparation of books of accounts. In bracket, we have 2 books of accounts. In this case, we have the profit and loss account. Then the second or the last, we have the financial statement. Now, in the second part, we are going to look at the business plan as the main part of this session, where we need to know into details in regards to business plan. Here, we are going to look at the definition of business plan, and we are going to look at the reasons for preparing a business plan. Why is it important to have a business plan? The third one, we're going to look at the major components of a business plan. Now, this area is where later I will expect all of you to be keen and follow it critically, because in your business, this is what you're going to use. Then lastly, but not the least, we have preparation of a business plan. So how is your business plan supposed to look like? Those are the things that we are going to look. Once again, thank you so much. So we are going to start with our first part of this program, that is the financial management. So here, when we look at financial management, first of all, we need to understand few things. As it was indicated in the content, that first of all, we are going to look at the definition of finance itself. What is finance all about? And then we have financial management. So when we talk about finance, in a simple definition, we say finance is the management of money and other assets. So that is the simple definition when we talk about finance. So we are going to look at how we manage the money that we have. So in business, we have this as our business resource, which is money and assets. So for the case of assets, we are going to look at it later because assets comprise of so many things. While when we talk about money, we look at the cash that we have in hand or what we are going to get from other people or other sources of money. So this is all which require a management, whether being money or assets, you have to manage them properly. And that process is what we call finance in this case. So when we look at the financial management, so in definition, we say financial management refers to general financial principles. So when we talk about the general financial principles, we are looking at things to do with the planning, such as procurement, utilization of funds of the entity or of that. You and your business, you are two different people. A business is a person that is made by the law, while you are created by nature. So here we say it, you in your business, you are also playing some roles that leads to the success of that business. And therefore, your roles are here including planning, organizing, directing the staffs, and the controlling, whether being the staffs themselves, the cash you have in that business. So they're going to look at the financial management cycle. So we say in financial management, it is just not a one-day kind of work whereby you can say, today I want to look at my financial management, and they start setting what you're supposed to do in that case, and not knowing that financial management, it is a process. That is why we are going to look at what we have here on the screen as financial management cycle. So when we look at the financial management cycle, we have 4 things in this case that we are going to look at. Things that we are going to look here at the 4. The first one, we have planning and budgeting. In planning, you have to look at what you actually need in that business. For example, when we take that will summarize the cost of the production.
Sorry for the interruption from the network. Let me hope everybody is getting me clear. According to the explanation, that was given by our presenter, Emmanuel Karaba. He's explaining about the financial management, which refers to the general financial principles, such as planning, organizing, directing, and controlling the financial activities, such as procurement and utilization funds of the capital.
Thank you so much, Philip, for taking us in this short break from the internet. I think my internet here is not all that stable, but I will be working so that it get back soon. Thank you so much for that. So I was trying to say here that in our financial management cycle, the second part is the resource allocation, whereby you need to know which kind of resources needs to go where. So some of these things you need to put in mind that when it comes to resource allocation, even the human resource, you need to know who is qualified to be in which position. So those are all resources within the business. Because some business require only one person to operate, but others may request more than 2 people to operate that business. And for that case, you need to know who is supposed to be where. And by considering the qualification of that person, is that person fit to be in that position? If it is the resources in terms of money, you need to know how much is needed to be in that particular point of operation, so that you'll be in position to divide the money or the cash that you have efficiently for the success of that business. That is our point 2 of our financial management cycle. In our point 3, we look at the operation and the monitoring. So after planning, budgeting, after that, you go to the resource allocation. Once you are done successfully with this one, now you go to the operation, where you implement the whole process that you have been planning, budgeting, and allocating these resources. Now you need to put it into practical work, whereby you now direct these people on what they are supposed to do, and you control them at the same time. So in that position, you'll be in position to know whether your business is now in its initial stage of starting point, or it is yet for you to start. It is from here where you will determine that. So you make sure that the operation is in line, and you as the owner of that business, you must be in position to monitor it to see the progress of business. And in the process of monitoring, you must be in position to see whether these resources that you have allocated, they are sufficient here. In case of other things, you must be in position to see that they are efficient. Now, lastly, we look at the fourth part, that is the evaluation and the reporting. Evaluation is the last part, whereby you need to see back, first of all, by going back to the objective of that business, and you have to be sure that the objectives of your business are successfully achieved. You have to analyze whether your work has gone well or not. If it has gone well, what has gone wrong, and what should be done in order for it to go well. Then from there, you have to produce a report. And this report, in this case, you must make it either publicly, or you may decide to make it for yourself. It depends on how you want to make it as a CEO of that business. So it depends from you, but in most cases, I advise you to make sure that this report must be presented to the staffs of that business, so that they'll be in position to know what they have done wrong and right. This is all about our financial management cycle. The next part now, we are going to look at the importance of financial management. In case of any question here, you can drop on our chat box here, or else you can raise up your hand so that you can be helped where necessary. I think my colleague will be there. In case of any question, he should be in position to notify me so that I answer you. Or else you can write your question down and you answer me later. Thank you so much. So let's come back to the importance of financial management. So the importance of financial management we have here, the first one is financial planning. We have safeguarding funds, improve profitability, acquisition of fund, tax planning, capital reserve. I think this one you saw it there. on the poll that was concluded in the initial start of this program. Then we have investment decision making. We have valuation of business, dividend decision, allocation of fund. So let's start from the first one. When we talk about financial planning. So here in financial planning, we said financial planning enables you as an entrepreneur or business person to make some financial decisions. What are the financial decisions that you need to make? How much money do you want to put where? Is what it will direct you to. Because if you have this financial planning, you will be in position to know how much you need to put in which area of the business. And in case, if there is insufficiency in one of the area of that business, you'll be in position to direct that money or get a portion of money from your main source of the business and you allocate it there. Because our intention here is to make sure that the business should run successfully. The second one, we look at the safeguarding funds. Safeguarding fund, how? Which mean here it will protect the money of the business. Because if you leave people anyhow, they will end up spending this money. Like for instance, if you have an independent management for that business, and in that case, you will have the manager for the whole of the business. And from there, he'll be in a position to know what is supposed to be put where. Now, from there, if at all you don't have this financial management, it will be difficult for you to protect your funds. You'll not be in position to know how much money is supposed to be put where. Because in financial planning or management, you will be in a position to know where the money is supposed to go. And from here, which means you are protecting the fund of that business or of that organization or company. The third one, we will look at that is improve profitability. So which means if you are practicing this financial management, you will be in position to know if that business is making profit or not. And therefore, you'll be in position to know if the business is not making profit, what led that business not to make a profit. And from there, you'll be in position to improve your profits. So that is the work of financial management. The fourth one, we look at acquisition of fund. So in case you want to get some fund, whether from around you, family members, or you want to get from the government programs and so on. So it will be your financial management system that will determine whether you need to go for fund or what you have is enough for you. Like for instance, if you are running out of cash, then you'll be in position to look for other means on how you can get money for running that business. So this is all achieved when you have financial management. Now we have tax planning. It is very important for a business, organization, company to plan in advance. Like for instance, you have your employees with you. And if you have, for example, 4 employees, and in our system of South Sudan and other countries in Africa and even in the world, it is always necessary that the employee has to pay taxes to the government. And now there, through the financial planning, you'll be in position to plan for these taxes because you will be in that point of knowing who is earning this amount of money and so on, and how much is to be deducted from his or her salary. We look at the next one, that is capital reserve. When we look at capital reserve, this one is the money that you keep it somewhere to cater for other activities. Actually, you contribute that money by yourself. If it is an organization or a company, the shareholders will sit down and contribute for the money, and a part of that money will be used for the daily running of the business or the organization. Now, from there, you'll be in a position to see, in case if your business is not doing well, then you will know how much money you have reserved there that will be used for the running of that business. Now, the next one, we look at the investment decision. Because we said in business, you are not operating that business only to end with it, but you may have a decision to make sure that that business should progress. And in that case, you have to look at the financial management system, whether it is allowed for you to continue and invest in other areas of business, or you need to continue with the same business that you are operating on ground. Because for you to invest in other business or a business that relates to what you are currently running, you must look at the financial status of your business, which is all accumulated in the process of financial management. The third last, we look at the valuation of business. How are you going to value business? If it is making profit, actually this point here is going to be related to this and this. But now, how are you going to value your business? Like, how are you going to look at your business in terms of progress? Is your business progressing or it is not? And if it is not progressing, what are you supposed to do? Is that business important for you to continue with or not? That is when we talk about the valuation of business. Now, the second last, we look at the dividend decision. Now, when we talk about the dividend decision, this is now when we talk about the net profit that was shown on the call before. We said a dividend is the money. The money is the money that you have got from the business, and you may decide to divide that money. Somebody is making noise somewhere. Can you please mute your mic? Excuse one of our participants is
You can disconnect.
Joseph. Joseph, can you please mute your mic? Thank you so much. So the second last, we are looking at dividend decision. As I was said before, we said the dividend is the money that you earned after making the sales of that business, after implementing the projects of that organization or company. So the money that you received after deducting all the necessary expenses you made is what we call the dividend. So in this case, the financial management process will help the stakeholders or you as the sole proprietor to know what you have there and what you need to use this money for. If you want to keep it for future use of the business, you can keep it. And some people may decide to take that money for their personal use, which is not correct, because we said a business is an independent person. So what comes from the business is not yours. It belongs to the business. So you don't have any right to take it unless you ask the business. If you are permitted to do that, then you can. But if you are not, then you need to keep it for other things that are business related. The last one, we look at the allocation of fund. Allocation of fund here, it talks about now the cash that you have, which area needs money, and so on. As I was saying before, this one is relating to one of the importance that was explained about. So this is all about the importance of financial management. So in order for you to properly manage your business funds, you have to make sure that before you set up that plan of managing it, you have to know the importance of this process. And by knowing that, these are the things that you need to put in mind, which mean you will be in a position to run your business successfully. Now we are going to look at the sources of business finance. This is one of the important things, but before we go into that, there are some messages here on our chat box. Let me try to get that. We are not getting you, sir. It seems to be a network problem. And if it is a network zone and you fix it well, thank you for that. Finance, when you look at the sources of business finance, here we are mainly looking at the 4 broad sources of business finance. One of the sources we have the debt financing. So when you talk about debt financing, we refer you to this area here. We say it requires a borrowing system, and the entrepreneur is bound to pay back the fund together with interest payable. So here we are looking at the money that's, for example, when you go to any of these commercial banks to borrow some cash, of course, they will allow you to borrow the money, but there are conditions that are always attached to that. And what are those conditions? One, when you borrow that money, put in mind that you are going to pay it with interest. Two, that interest depend on the duration of the time you're going to spend on the use of that money. So that is what we are going to consider when we talk about the debit financing. So, for example, here in Juba, when you go to Eden Bank, you go to KCB Bank, that is Kenyan Commercial Bank, you go to Equity Bank, and the other banks, Ivor, and so on. So when you go there and borrow money, put in mind that your business will be a business that will generate cash for paying that money back. Otherwise, if it is not a business that will generate, because some people, they may set a business, but at the end of it, the business is not generating money. Which means you may do nothing with that money, and at the end, you will pay money. This is not right. And we said a business should be something that will generate money. And for this case, you must know that your business will be in that point of generating money in order to pay back the interest. I don't know how much they charge here for the interest, but in most cases, it is 8% or 10, depends. Some goes to 12%. So it depends on the commercial bank or business entity that you may go to. The second one, we look at the equity financing. So under equity financing, it doesn't require you to pay back the money, because when we talk about equity financing here, we are referring to the money that you as the shareholders or you as the sole proprietor has already contributed for that business or for that organization to operate. So in that case, as I was explaining before, I was talking about a capital reserve. So that money is what you have taken and put aside to cater for other activities of the business that may come. In case you may run out of finance, you may go and pick that money. So in other words, that capital reserve is what we call equity financing, but only that this equity financing, it may include what we called, if you can see here, we have retained earnings, also known as revenue reserved or dividend. So it includes two things, that is the money you have contributed by yourself and the profits that were earned from the business itself. So in this case, you may not pay it back unless if you want to create that system in your business whereby you also give yourself condition. At the end, you have to pay this money back to the business, or the business pays its money back to itself. It depends, because you want to keep maybe that money somewhere to cater for other activities and so on. You may do that. But in most cases, after getting that money, since it is part of the business, you may put it there, putting in mind that what you are put in business is more than what you had planned before. Now going to the third one, we have the internal financing. So when we look at internal financing, you have to look at the business itself, because we look at this one here in form of the funds that are generated from several sources within the company. For example, the profit, sales. For example, you may be selling your assets of the business out, reduction in the working capital, you reduce what you have with the business that you are running. Then we have the receivable, sorry for this interruption. This network seems to be unstable here. I apologize for that. Just give me some minutes. Let me try to fix other things on my network. I will get.
Thank you very much, Emmanuel Karaba. I think we have received the information, and it is clear, though the network is a little bit disturbing.
Thank you. Thank you so much, Penny, for taking up on that point. For sure, this network is not all that good, more special on Sundays. Somebody is making noise somewhere. Can you please stop that next? Thank you. So let's get back here. So we were looking at the sources of business finance, of which we have explained so far 3, and we are now going to look at the 4th one, which is the external financing. So when we look at external financing, even from the word external itself, you may be in position to know what this point here refers to. So when we look at external financing, this may come from family members, or it refers to the money that we get from family members, credit suppliers. For example, if you're dealing with in a business whereby you need some supplies from other producers, you may ask them to supply for you, and that is what we call external financing, and you don't pay for that service or goods within that very time, but it will be paid in a later time after selling out the goods. And so we look at the government programs. For example, the government may create a program whereby you need to go and apply for other grants that are offered by the government of a particular country. And also we look at the grants in general. This one can be done by the government or other bodies, companies, or organizations within the country or continent or in the world, where you need to apply for it and you go through other process in order for you to get the money or the fund that you need. In most cases, these grants, they may have some regulations that are attached to it, but it depends on the organization that offers the grants to the business person. Like currently in Africa, we have some organizations that are doing this, but it depends on the duration, because they have a particular moment where they allow these entrepreneurs to apply for that. And maybe later we may try to share for you the links of those people who are doing this program, so that in case when they open or when they give a call for application, so that you people will be in position to apply for these grants. They are free, some of them, but you have to follow the procedures that are needed. And those are what we call the external financing. As I was saying earlier, in case of any question, you should feel free and ask. You drop a question on the chat box, or you may raise up your hand and you'll be helped where necessary. The next one here, we are going to look at business records and data. So when we look at business record, there's one hand up. Any question from Ochara Charles? You have raised your hand up.
Yes, there is a question. Yeah. Yes, there is a question. It's not a question, a clarification.
Yes.
Because I'm a little bit getting confused about the equity financing and the internal financing. If you can highlight
Equity
more
financing
on that.
and
Yes.
Okay, thank you so much. Thank you so much. So when we
yes.
So when we look at it,
I still have more questions.
Okay, ask the question.
I would like you also to clarify more on the financial, to differentiate for me the financial planning and the financial management, because it's a little bit confusing.
Financial planning and financial management.
Yes, in other document you find it financial planning, and then in other document you find financial management. The other one is financial planning. If you could highlight more on that area, it will be very good.
Thank you so much. I think from here, when we talk about financial planning and financial management, right? This is what you are asking. So when we talk about financial management, we are referring to overall principles of finance, whereby we talk about planning itself, organizing, and where also you have to plan for your finance. It comes from this point. You have to plan for your finance. So when you talk about financial management, it is the overall work of the finance in the organization or in the business. So now when we look about financial planning, it is just a small work within the business or within the organization, whereby you need to set your things, what you are supposed to do in regards to your finance. You take financial decisions. What is this amount of money supposed to do in this business? If you are supposed to divide this money, which person is supposed to go for this and that? So that is now what we call the financial planning. As I was saying, the difference is that this one is talking about the division of the money that you have. How are you going to put it so that it cater for the activities you have in the business? While financial management, it refers to the overall work of financial process. I think I've answered you there.
Yes,
Thank
you
you.
have answered.
So now when we look at the next, thank you. Now the second question where you talked about equity financing. I was saying equity financing, it involves two things. One, the money that you as the shareholders of that business has contributed, and the dividend or the money that you earned from running that business. We assume that the business has been in process for some months or some years. So in order for you to have what we call the equity finance or another source of business finance, which we call it as equity financing, you must add the money that you reserved from the contribution you made, plus the money that you have taken from the profit and you put together. That is what we call the equity financing. While this internal financing, it refers to the money from within the business. Like, for example, when you sell some assets of the business, if you have vehicles for running that business, that is what we call what? The internal. Something you raise from within the business. The profits itself, yeah, you were saying before that it is a little bit confusing because we have profits here, and again, when we come to equity here, they have a link with each other, but only that this one, it involves two things, while this one only deals with the things that belong to the business alone. I hope you got me well. Thank you so much. So now let's come back.
I got you well. It means the financial, equity financing, it is for the business which is still starting. And then for the internal financing for the existing business.
Equity,
I think that
equity financing, it is some money that you contributed for starting the business, some money that you have taken somewhere as a reserve. Now, plus the profits that you have earned from that business, because it is believed that at that point, your business has run for some months or some years. So the profit that you have kept somewhere, plus the capital reserve that you have kept also somewhere, you add them together, that will form what we call the equity financing. While the internally is when you sell some assets and also part of the profits that you made, the capital receivable, and so on. So that is what it forms what we call the internal finance. I hope now it is clear.
Yes, thank you.
Thank you so much. So let's get back here. We are going to look at the business records and the types. So the first thing that will come to your mind is, what is business record? After knowing what is a business record, now we go to the types of business record. Now here, business record, we said it refers to information as it was defined before in the code. We say a business record refers to information created, received, and maintained as evidence. Information that are created in the process of running that business, they are received by those who are managing the business, and they are kept properly as records for the business, because these are the evidence that later you will so on. So we said this information that are created, received, maintained as evidence, they must be within the business activities. These are what we refer to as what? Business records. So those records that you are making for the business, they must be related to the business activities. When you buy a car for yourself, using your personal money, don't record it there. It is not part of the business, but you only record what belongs to the business. Those are what we call business records. For example, when you go to the market, like for example, if you say you are operating a chapati business and you happen to go to the market and buy maybe salt and so on. So some of those things you have to record them. They are part of what we call the business activity. So you have to put them in the business record books so that it will clearly later show what you have for the business. So that is the meaning of what we call business records. Then after that, we go straight to the types of business records. So under the types of business records, we have mainly 5 of them here. And sometimes you may find them to be more than this because people like splitting things into many. But here we are putting them in broad concepts so that it should not take us long and we understand it in a short form of it. So when we look at the types of business records, we look at these 5. Somebody is talking. Is my speed too high? Okay, you can mute your mic if at all you are not intending to talk. So let's get back to the types of business records. Here, the first one, we look at accounting records. So we all know when we talk about accounting records, we look at the whole transaction that we are done within the business, what you received, what has gone out of the business in terms of the payment for the workers, purchase of other items, and so on. And for what comes in case if you have received money from the other sources we mentioned before, or else if your business has earned some profits, all these things, you have to record them down. So this is what we refer to as accounting records. We say they include all transactions made within the business. The second one, we look at the bank statement. So for the bank statement, you look at all the business details with the bank. For example, if you have opened a bank with the end of the banks that are operating within your area, just within that town where you are, and you are operating your business and all your money is deposited in that bank account, make sure you must be in position to make a follow-up of all this bank statement by producing the bank statement, which means you have to cross-check what you have on hand and what is there in the bank. Some people sometimes they say a bank has all details of what you have taken for this network interruption again.
Sorry for the network interruption. As my call is restoring his network or network, he's explained to us about the business records, the types of records, and as he talked about accounting records, he talked about bank statements, and in that explanation, he was trying to tell us that it does not mean that the bank knows all the statements about the business, no. But you as a businessman, it is your mandate to record and also to know how the business is performing according to the records that you will be following also from the transactions that you carried out from the bank. And then also we have also to look at the legal documents in the business records. What are the legal documents? When we talk of legal documents, we have certificate that you must acquire before starting the business. We have taxation receipts. This will all act as legal documents because in business records, when you acquire those things, you must record them down in corresponding to their costs. How much does this certificate cost? How much does this statement cost? Okay. So since our network is restored, Karabo, you're welcome. Still our network has a problem from Karaba side. Let me continue. Here we are talking about legal documents, and I think I explained that one. For those who still do not understand it, we are talking about the cost for all acquiring the certificates needed for you to start the business. In the business records, of course, this must be recorded. And then also we have insurance as insurance element as a type of business record. There are some other businesses that requires uh, insurance to be a must. Like for example, in the transport business, you cannot operate a vehicle or you cannot even go to the road without the license or without insuring your vehicle. So for this reason, we also consider insurance as a type of a business record because you cannot go and do insurance purchases without recording them in your cash transaction sheet. Also, we have uh, permits and the license. This is what I was talking about. These ones it is a must for you to have all these permits and the licenses. This will help you, especially in taxation policies. This will help you in operation policies. Like for example, as I said before, that when it comes to the business of transport, you will not be able to operate without acquiring these permits and these licenses. Like a driving, when we talk of license, we have driving license, we have trading license, and when we talk of permit, we talk of city council operation permit. We have healthy city council healthy permit. These are all the documents that are needed before the business starts, and that is why we are putting them as part of records, as part of business records. And here we also have production costs. But when we will be talking about production costs, here we refer to production cost as the cost in the process of producing a good or service. It includes the material cost and the other expenses. Now, in brief explanation, production cost is the cost that can never be exempted.
Please,
you cannot exempt production cost because
you
if
the
you don't,
possibility here with the screen.
then you will not be able to acquire. For the reason, it is the start of the business. So this cost is the money that is required for you to start the business. Like for example, if you wanted to start the transport business, you need to first look into what do you need in order for you to start that business. One, you need a vehicle. When you have that vehicle, before the vehicle goes to the roadside, you need a number plate. And then after acquiring the number plate, you need it. You need the driver who is having the license or the driving license, yes. And then after having all these things and all the permits, that's when the business will start going where? To the roadside to start running the business. The vehicle will start going to the roadside to run the business. So in this case, all the costs that is needed before that business starts is what we call the production cost. It includes the material costs and other expenses. When we talk of material costs, this is all the money needed for you to buy all the materials. And when we talk of other expenses, these other expenses may be the rent, the acquisition of legal documents, and then let me say also the payment of the employees. Of course, if you are starting business, you cannot expect that you will be the one to operate alone. You may hire someone to come and do the business on your behalf. So for this reason, you will also include if how much per an employee. And when you have all this, you will be in position now to have the business operate successfully. So here, we're also going to look into the books of account. Here, we are going to look into the profits and loss account and
Hello,
financial
Mr.
statement.
Yata. Hello,
So here we have the example of
we are not seeing your screen.
I think our network, my brother's network is back. Emmanuel Karaba, you're welcome.
Thank you so much. Sorry, guys. It seems like today's network is not all that well, but I'm really trying my level best to restore the network back. I hope it will take us now well. Thank you very much for that patience, and thank you, my colleague Pili, for taking us to the party that was left. I appreciate that. Thank you so much. Let me just get one thing back here, then we shall continue because I have to share this information to all of us. This time you should ask my colleague Philip and he will answer you. Kindly feel free to ask questions and Philip will be in a position to answer that as I will be putting one or two things in place.
Maybe you can go to the chat room and then you check there are some questions raised there by some of our colleagues. It's better also if you could answer them.
Thank you so much, guys. I think I'm now well set.
As my colleague Emmanuel Karaba said, if there's any question, please you are welcome. I will keep sharing with you as he will be restoring his network. Welcome.
Okay, thank you guys. I think it is already fixed now. We can continue from here. I think my colleague Philip has so far explained for us the types of business records, and I'm not going to repeat this again. And he also looked at production cost. In case you want to open a business, you should know very well that there's something called production cost, and this is very important. And all this, you have to put them in place because you cannot run a business without production cost. That is what will contain of what you need to buy in that business and so on. Thank you so much, Philip. I think we are going to move to the next. That is the books of account, which I believe he might have studied something in it and they left it in the middle. So when we look at the books of account, the first one, we look at the profit and the loss account. Here we are making it for the year. Up here, the first row, we have the row for months. We have the first month. If you start from, we cannot say no or what. It depends on the month where you started that business, and make sure it should go for 12 months. And this is going to be our first month, second, third, fourth. Sorry, Peter, did I have any question?
Yeah, there's a need of some clarification regarding the production cost. One of it I may go for.
Your network is not all that clear.
Okay, there's a need of some clarification. On production cost. I may go for maybe for agribusiness.
On production cost?
Yes.
Oh.
So what should be the?
Sorry, you repeat the question again.
On production record, I may go for agribusiness.
Okay, sorry, Peter, I think your network is breaking and we could not hear you very well. Maybe you can type that question on the chat box and we will be in position to answer you straight. Thank you. Okay, thank you. So we are looking at this profit and the loss account. As I was saying, the first row here is for the months. Now these columns here, the first one is for the sale. We have up here sales. Actually, these are the activities that are going to be done in the business. We have the sales. These sales will go for the 12 months, and we have only indicated here for 2 months. And we have the direct material cost. This one comes from the production cost here. When you look at this production cost, and if you want to start this chapati business here, you must buy these items. After buying these items, you have to put them here. They are under what we call direct material cost. This is for the month, and we have the direct labor cost. The labor that you're going to pay here is going to be for 2 people, and this is going to be for the first month. And we have the total direct cost. When you sum this amount and this one here, it will bring this figure for 1 month. Which means this is the money you're going to spend for buying the items needed for running that chapati business for 1 month and the labor cost. Now, after this, you need to know, after buying these things and paying this labor and they operate for 1 month, you will realize that the sales that you will make for this business, it is assumed that the sales will go to this 208,000. After getting this 208,000, you subtract this total direct cost from this money. You will get the gross profit that I was talking about before. Gross profit. Gross profit is the money you get after deducting the whole expenses you made in that business from the sales. You will get what we call gross profit. So when you deduct this from the month, so from here, you have to go to other costs in case if they are there. We have other indirect costs. For this case, the other indirect cost in terms of rent, because we said a rent is an indirect cost because because sometimes you may dodge rent. You may operate your business in an area or a place where you don't need to pay rent. And also you need to have other indirect labor costs at all if they are there. But for this case, they are not there. So when you sum this other indirect costs together, it will give us 6,000. Now again, this 6,000, you take it away from this gross profit. When you take it away from here, it will give us now the net profit for that month. So which means in the first month, our net profit for this business is going to be 2,000. And I think this one, when you start as an entrepreneur, some people may run away because they think it is too small for them. Yeah, it is too small for them and they will run away. This is not the case. Because we say a business, you don't start it now and you progress at once. You start and you earn something small and you continue from there. Now for this case, after running the first month, we believe in the second month, there's going to be market for those goods that you are producing, or those products that you are trying to supply in the market. So in that case, we said your direct cost may increase. And here we are using a percentage. It is not anyhowly. That direct material cost is going to increase by 10%. We see will give us a total cost for those materials that will go up to 134. So this figure, we got it by multiplying this one by 10 and we divide by 100. It will give us this. While our direct labor cost, because we don't increase the payment for our workers, so we pay them the same amount, which is 78,000 per month for 2 people. While our total direct cost will now come to this because our material cost has increased to this. So this is now what we are going to have for our direct cost. And for this case, if our direct cost has increased to this, and again, our sales will increase, obviously, our sales will also increase by 10%. That is just an assumption. It is not something realistic, but we assume that this is how your business is going to boost, or it is going to increase in case if there's going to be market for your goods. Now, in this case, when you subtract this from this, you will get this. And your direct labor cost remain, the rent remain to be 6,000. The total rent remained the same. And now in this gross profit, when you subtract this indirect cost from this, it will give us 10,600. That is in the second month. Which means now your business is doing what? It is progressing. So this is how we normally calculate our profit and the loss account when you are running. This is the simplest way of growing your profit and the loss account compared to another way that we normally use when we are learning from school or from institution. Normally there they use what we call the T format. But here we are using the horizontal format, whereby you are recording from your left and you're going to the right. And so that it will accumulate for all the 12 months here. I can see 2 hands up. Any question?
Yes.
You are welcome.
Is Isaac? Yeah.
Yes.
I just have
Isaac, you're welcome.
I just have a question on how to record like the cost. Yes, like in the first month we have our records. Now, if you are to move to the next month, and out of all the costs that we incur, plus even subtracting our gross profit plus the net profit. Now, for a business that is having like a stock, okay, yes, this is the money we got, and this is after subtraction, this is the net profit, but we have still stocks in the shop or in the store. How do we record that? Do we convert like the estimated price or cost of that stock, then we include it here, or we just leave it like that?
Actually, the remaining stock that you have in the store or in your shop, you have to make sure that you have to convert it to be in form of money. You don't record it as a stock in this value, but always things we record in business, business normally works with the monetary terms. So everything you bought, if you want to record it down, you put it in money terms or monetary terms.
Okay. Then how
Yeah.
do we fix it like among this list here that we have? We
Okay,
put it,
like for instance, in this case, we believe that the materials that were bought, they were all sold out. But now, in case if there's going to be some of them who are left in the store, convert them into what? Convert them into monetary terms, and you are going to add it separately somewhere down here. Are you seeing the arrow?
yes.
Yes, if you are seeing an arrow here, you indicate and that item that is left in the store here, and you write the value. So it is going to be summed as the total amount of money that you are going to have on hand, though it is in form of good.
Okay. Thank you. Thank you so much.
You're welcome.
Yes.
So thank you so much. I believe the next person. I
Yeah,
think you
I
also
think
have to be fast.
There
because
are
I think
questions.
that internet has taken a lot of time from us.
Yeah,
You're
I
welcome.
want to remind you that there are some questions in the chat box which you have not answered.
Oh, in the chat box under production, I may go for a agri business. What should I consider as my record? So in agri business, there are always things that you buy there, right? You cannot go for agri business and you don't buy tools. There are going to be tools, machineries in case if they are needed. You have to also record them there because they are part of what will be recorded in the profit and the loss account. They will, all of them, you sum them together. What you bring here under the direct cost is the figure. But all those tools, machinery, and so on, you file them all there and you bring them here. Because I told you we have what we call production cost. And this is the sample. Have you seen here? So you sum all these items all, and you bring them here under direct material cost. You write them here. Are you seeing? So all of them are needed to be recorded there. There's nothing that you can leave out. I believe I've answered that question. What's the difference between direct and indirect labor? Direct and indirect labor. So let's come here. Direct labor, it is what you are giving to them in form of salary or wages. Now, when we talk about indirect labor costs, we may believe that maybe you want to give them, like, for example, you want to give them something for transport and so on. So those are what we call indirect labor costs. And in case if they are there, if you are providing them with the transport separately, apart from their salary or wages, you have to indicate them here. Those are what we call indirect labor costs. I hope I've answered that question. Thank you so much. So let's move to the next. So we are going to look at the financial statement for the month of this, the first month. So here, if you are starting in this month, you can put it as the month. If you're starting in any other month, you can just put that as your starting month. And these are things that you need to do. On the row, the first row here, we have the date, particular stroke in bracket, we have item, debit, credit, and the balance. So it is like a running method. In high school, I think we people who did business, you are taught something to do with it. So whereby you have to indicate the balance of the previous month. Like in this case, our balance for the previous month that was brought to this year, 2023, it is 120. And we record that one in debit because on debit column, because that is what belongs to the business. Now, after making sales, you also record it here. But in case of anything that goes out, you have to put it under the credit. So this is just a sample. We just made it as a sample. But this is how you need to run. So that at the end, like for example, when you record this and you make some sales, you write here, you add the balance plus the sales, it will give you what you have here. Are you seeing? The balance is already put under the credit, under the balance column. Now, after writing the sales, you add it to this balance, you bring it here, as it will make a total of 160,000. Now, in case you made some purchase, for this case, we have purchase of Azam. It amounts to 52,000 for the month. So we reduce it from here, and it will make our balance to be 108,000. So this is called a running method. So you play the three columns at the same time. If it is something that you add it to the balance. If it is something that need to be deducted, you also reduce it from the balance, and that's why you can see you add, you reduce. In case of any question under this, you may ask on the chat box, and in case if you're not answered later, you may post that on our WhatsApp group and it will be answered. So this is how we run our financial statement for the year or for the month, and for this case, it is for the month. Now let's go to business plan. Now this is the main point where I need all of you people to focus, because it is the main thing that all of us as entrepreneurs need to know. When we talk about business plan, in definition, we say business plan refers to document that conveniently demonstrate that your business idea can sell enough of its products or service to make satisfactory profits and attractable potential financial, which means your business plan, in this case, it is defined as a roadmap, as it was indicated in our poll for yesterday. We said it is a roadmap that clearly defines what you're supposed to do in the business and how you're supposed to do it. And what you should bring in that business in order to make that business run is what we call a business plan. In a simple definition, this one is a little bit manipulated with a lot of words, but I encourage you to use the one that states that a business plan is a roadmap that clearly defines what you're supposed to do, how, and with who, when, and where. So that is what we mean by business plan. So we look at the importance or why we should prepare a business plan before starting that business. So why prepare a business plan? Why do you prepare a business plan for that small business or that large business that you are operating? So here we have the first one. We say it defines and focuses business objectives and goals. Because in a business plan, you are going to clearly state the objectives of the business, what you want to achieve at the end, whether at the end of the month, at the end of the year, because you are going to have overall objectives of that business. So you must be in position to clearly state those objectives of the business, and that is what the business plan normally demonstrates, and it is very important. And the goals, what you want to achieve at the end. Number two, to clearly communicate your visions, stroke ideas to others within and outside. Within, we have those who are operating the business, like your employees within the business. They need to know the vision of the business, what you want to do now, and what you want to do in the future. You have to state to them. That is your vision and mission statement. If you want to include that, well and good. And for the outsiders, they want to know how you are running that business. Are there other things that need to be put in the business? And if there are those things that need to be put in the business, what are those things? Are they matching with the interests of those companies or organizations that have a look into that business or that organization you're operating? So this is what the business plan is stating here. The second one, we say to avoid silly mistakes. Silly mistakes are some of those mistakes that sometimes we ignore them. We thought they are simple and they cannot affect our daily operation of the business or at the end or the annual preparation of our. So those silly mistakes, we say they don't affect, but at the end they will affect. For example, if you take some money for personal use, that is a silly mistake. You take it for your personal use, and at the end, you may think it will not affect the business, but it will affect. And those are the things that the business plan will stop you from doing, because they don't allow that. Take us on the chat box. You need to check on things that are there and they let us know. Thank you. In case of any question, keep on posting them here so that we get to know things that are going on. Thank you. The second last we said it is a tool. How is this one going to be a tool for the business? How is this going to be a tool for the business? We say a business plan is a tool for fundraising, marketing, monitoring. Because when you go for marketing, you must be
Yes. Yes, my colleague Emmanuel Karaba, and also taking us through that. As we heard him clearly, I think the explanation is very clear, and as he said, let me go through our chat box to see how many people asked questions, such that we will be able to help them. And here, I think there's a question from one of our attendants who said, what if you have a negative balance from the last month? Do you record it on debit or credit? I think that one, my colleague Emmanuel Karaba will be prepared to answer that. And then also, he said, in a scenario, you don't have the cash or have stocks in the store. I think it is the same thing. Also, one of our audience, Salva Liu, said, it's like we don't have group discussion today. But I think we'll have that one at the end because of time. We are running short of time and we still have a lot of things at hand. Also, Isaac Wako asked it, what I mean is I have a negative balance, but have enough stocks inside. Shall I convert the cost in monetary terms and record it in my balance sheet? Yes, of course, this is what my colleague Emmanuel Karaba said. If you have the stock, you need to convert them into money, into monetary terms. Of course, that is why we say you must have the cost of production from the beginning of your business. You cannot start the business without having the cost of production statement. It will be from the cost of production statement that will help you. All the goods that you bought, they costed you how much, the one that you sold for how much, and the balance left, they will also cost how much. It will be from that statement that will help you. It will be from that production cost that will help you to have all these details about the remaining stocks in your, either in your shop or in your store. Let me hope I answer you clear, Wako.
Thank you so much, Philip.
Yes, yes, thank you.
Thank you, thank you, thank you. I think they got it right. In case of other things, We may share our details to you later. You may be in position to ask us from time to time. So the last one here, that is the reason why we prepare a business plan, is to be realistic on our intentions. That is, you need to follow what exactly you have stated in that business plan that relates to the business. So you don't need to bring things from outside and you dump them in and you start working with them as part of the business. That one cannot work. Now, the next one, we are going to look at the components of a business plan. Components of a business plan. Under the components of business plan, the first one, we have the executive summary. The second one, we're going to look at business description. The third one, we're going to look at marketing plan. Fourth, we are going to look at competitors analysis. Fifth, we are going to look at management and organization. Sixth, we are going to look at business operation. Seventh, we are going to look at financial plan. The last one, we have appendix. In most cases, people may summarize this to 3, 4, depending on how they wanted the business plan to look like. But for this case, we have decided to give you the whole details regarding the whole components of a business plan. So we are going to look at this one after the other. The first one, we have the executive summary. It includes, and remember, this one is not for all businesses that are already existing. In most cases, this one is for a business that you are starting. Because for an existing business, you may have things that need to be, others need to be excluded from here. But this one, we are giving you the overall information that is needed. For executive summary, it includes what you need to write in executive is here. And all of them are going to be headings. For example, type of business, you write type of business and you have to indicate there, what type of business are you going to operate there? Are you going to operate on transport business? Are you going to operate on social media business, like making some adverts and so on? Are you going to operate on air, on these flights or aviation companies? Are you going to operate on schools? You indicate them here. Even nowadays, people are taking church as a business. Is it going to be a church or something like that? How to indicate it here? It is going to be the type of business that you have. Secondly, under the summary or executive summary, you have the products or service to be offered. What are the type of products or services you are going to offer under the type of business you have stated here? You have to indicate clearly the types of products that you're going to offer. And you also have to state as how unique is your business. Is your business unique from that business that are already there in the market? Or it is going to be something related to that? Because we are talking about entrepreneurs. You have to think and create something new. Because we said we are innovators. If you are somebody who can innovate or bring something new, then how unique is that business to the environment you are in? The fourth one, is there any opportunity for products or service? The products or service you're going to offer, is there any opportunity for them? Like in terms of market and other things, is there going to be any opportunity for them? You have to clearly state for us here. And as I said, you indicate this as a heading, small heading, and you write those things under it. But the main heading is the executive summary. Under executive summary, again, we are now here at the 5th point, the business status, stroke stage. Are you at the initial stage of that business? For example, if you are starting that business as an entrepreneur, you are innovating, or you are starting something new, you have to state it is an initial stage of business. And if it is something that you have stated some time back, you have to be clear to the rest, because sometimes this business plan will not end with you. It may go to other people from outside. So you must be clear. You are at which stage of this. Are you advancing? You are in the middle, or you are here. The legal form of the business, is it registered under the authority? And if yes, you have to state it here. And at the appendix there, you have to give the documents for registration. Location of the business. Where is your business located? If it is in Juba, where exactly? Continue custom Melekia, Munuki, Budele, where? You have to state that location clearly here. Target market. What is your targeted market? Like here, in terms of, you can give it in terms of age range. From which age is your business going to target? For example, if you're targeting youths from 18 to 35, or if you're targeting children from 5 months to 17 years, or if you're targeting the old people, from which age exactly, you have to put it there. And the class of the people, are you targeting the low income earners, high income earners, or middle income earners? This is what we mean by targeted market, which means the type of customers you're going to have in this business. You have to state it clear. On point 9, we are looking at the percentage share of the market. So when we talk about the percentage share of the market, what do you think could be the percentage of that your business in the market? Because already we believe there are people who are already there in the market. They must be selling things similar to what you're going to offer. But what do you think will be the percentage of your share in that market? You have to state it here. Some of these things, they don't require long statement, but you put just something in 4 to 6 words, or 2 even words can be enough. It depends on the point that you need to state here. Or point 10, talk about competitors' strengths and weakness. What do you think are the strengths? What do you think are some of those things that will make your competitors, people who are existing in the market, to challenge you? Or what do you think they are good at? You have to state it here. This one is only done after carrying out the market research, because all these things you write them down after when you are done with your market research. Yeah. So the next one, we talk about the weakness. Of course, what are those things that you think those competitors in the market, they are not doing them well, and you think when you do them, you will beat them up in the market, and you turn those weaknesses to be your own advantage. So you have to state them clearly, so that by the time you started the business, you must be in a position to know what you are supposed to do. You should not go like people who are already there and they know what is there. But for you as a starter, you need to follow those things critical. Point 11, we have strategy of entering the market. What could be that strategy you're going to use for entering the market? Like, are you going to make some adverts in this case? Should be one of the strategy for entering, or are you going to call people for a gathering whereby you will inform them about how you're going to start that business and the services you're going to offer? You explain to them. These are some of the things you need to state here on the strategy of entering the market. Number 12, we are looking at the managing staffs and their qualifications and experience. How are you going to manage your staffs that you are going to employ in running that business? What are the mechanisms you are going to use in selecting them in terms of qualifications and experience? And how are you going to make sure that they should stay longer in that business? So all those you have to staffs and their qualifications and experience. 13, we look at time frame for accomplishing your goals. You have to give a limited time frame. The goals that you have set, make sure they should be in a specified period of time. Don't just put it plainly like that. It will not look nice to entrepreneurs. We look at how much money needed for starting. That is now the working capital. How much do you need for running that business? That one now you find out on after putting down the production cost. That is when you will know how much exactly. You only give the figure, not all details. Types of financing, what you are seeking for in terms of financing. Are you seeking for loan for opening that business, or you want to first apply for grants somewhere before you start? What are the sources of financing for that particular business? These are things you need to state it clearly here. Or if you are the one contributing by yourself, you have to indicate it. Or contribution from shareholders if you are many. Number 16, we have strengths that will make the business succeed. What are some of those things that you can see by yourself that can make your business succeed? Those things you have to also state them here. Then the future plans. Are there some other plans that you have put in place that you think can make your business succeed? You have to also state them here as well. In our second component of business plan, we look at business description. Under business description, now this is where you need to clearly state your objectives, your vision statement, your mission statement, and your goals. Objectives, we already know what you want to achieve. Your vision, what you want to do now or in time to come. The mission statement, almost they are related, because we said a vision must align with the mission statement of that business or that organization. So you have to make sure that you have to match. And what are you going to, those are the goals. Second, we look at the specific objectives. And when we talk about these specific objectives, because before or earlier, I was talking about objectives generally, and I was talking about specific objectives whereby it must be something that target a certain area within your business. Like for this case, we say your objectives must be SMART. SMART, we mean an acronym whereby the letter A stands for specific, and the letter M stands for measurable, letter A stands for achievable. Sometimes people say approachable. Letter R stands for realistic, while letter T stands for time-bound. So we said your objective must be SMART, measurable, achievable, and realistic. Lastly, it must be time-bound. So to be specific, we mean it must target what exactly you mean. Don't make it randomly. Measurable, it must be measured in terms of time. Approachable, you must be in position to reach to your objectives at the end of time stated. Realistic, it must be something that at the end you will be in position to get. You don't need to state something that at the end you'll not get. Time bound, we're looking about the time frame now. It must be accomplished within that time. So here we have given some sets of examples, but not all that to what you may be thinking in that your business. But we said your objective or your specific objectives must be service objective. One of it must be service objective in the way that the quality of products or services, you must clearly state them here. Secondly, we said the second objective must be focused on the profit. And we call it profit objective. Actual percentage and amount targeted. What will be your targeted amount or profit that you will get at the end of that time stated? If it is 1 month, 1 year, 5 years, it depends on the time duration you have stated. We have growth objective. Here, when we talk about growth objectives, you must be to give an objective that will state to people whether your business at the end will grow or not. This is what we mean by growth objective. Lastly, we look at the social objective. Now here we are looking at the corporate responsibility. Is this your business going to benefit the people in the community or what? So this is what we talk about, social objective. And if it is going to benefit the community, the people around you, you have to state it clearly here. The third one here, we are going to look at the type stroke form of business venture. I think you just copy from the summary, because when you talk about executive summary, it actually summarizes what you're going to give in details. You have to state the type of the business you're going to operate, date of commencement, when are you going to start that business, physical location, where is that business going to operate, advantage of the location, is there going to be an advantage for that location, like in terms of market, customers, and so on? Will that location really favor you or not? Number 7, we look at now your contact. That is the postal address, physical address, street, building, roads. So now we are looking at now the direction of that's your business. Where is that your business located exactly? You have to state plus here. That is the postal address, physical address, in case if you have, but they're always there. It is also necessary. Number 8, we look at contact details, phone, contact, we have email, website, in case if you have it. Number 9, we have brief history of the business. Like assume if your business has been in operation for some time. This one is now randomly for those who are starting and those who are already existing. Like how long is is your business being operating? You have to state it in the history of the company or history of the business. Just brief, something brief, summarized and direct to the point. And sometimes if you think this one is not necessary, you may decide to eliminate it. The brief history of the business, you may decide to eliminate it. But also it may be good to just give brief about maybe products, how it is going to run and so on. Number 10, we talk about experience of the owner or owners. In case if you are many or if you are alone, what are the experience that you have in regards to that business? You have to state it here. Have you been working in a business related activity that you're going to operate in? If not, you leave it, and if you have to state it. The third one, we're going to look at the marketing plan. Under marketing plan, we are going to look at the description of targeted market. The same thing we gave at the executive summary, you have to also give it here. And here now we are looking at the customer segment. Now, when you look at the customer segment, we are looking about the division of the customers from the lower, middle, and the higher income earners. So you have to state them here clearly. Description of products or services. What are those services or products that you're going to offer? You have to describe them clearly now in details here, so that everyone who comes across this business plan will know exactly the kind of services or products you are offering here. My colleague Philip, I think you need to go through the chat box, and you know there are already chats there, but due to time factor, I may be going straight. And in case of other questions there, you need to answer them directly. And in case if it is a question which requires me, I may also be in position to answer it later, and the person should write that one down and let me know. The fourth one not the fourth, but the third one, we look at the price of products. Price or prices of products, stroke services. You need to clearly state how much are you going to charge per those products. Prices are important because at the end, you should not end up giving out your goods at a lower or higher prices. That will discourage or encourage your market at a loss or a closer point of the business. You need to know by assessing the market clearly what could be the price of those goods that you need to offer. The fourth one, we look at the distribution of products. What are the means of distribution of these products? Are you going to deliver them on door, or how are you going to give access to customers in regards to your products or services? For example, if you're doing transport business, are you going to carry them to their homes, or you're going to leave them like this public taxi on the roads? They leave you by the roadside and you take your own means to go home. So you state clearly here the distribution of the products. And in case if they are coming to buy from you directly, you have to also sit there under this heading. The last one, under plan, we have promotion of products or services. How are you going to promote? If you're going to do it, but it is always necessary as an entrepreneur or a starter of a business, you must be in position to state it clearly. The means of promotion you're going to apply. Is it social media means? And if it is social media, are you going to promote via Facebook, Instagram, Skype, or you're going to promote? Just state that means, and you should be sure that that means you have stated it will make your advert reach to your customers. Or even track that will be moving on the street with people advertising these are the goods from this company, also going to be soon on the market on this date, so be prepared to purchase the goods. So you have to state here. The fourth one, we're going to look at the competitors analysis. So under the competitors analysis, we're going to look at the internal analysis, both strengths and weaknesses. Now you look at yourself. What are your strengths and the weakness? So that the weakness at the end, you turn it to be an opportunity, or you turn them to be a strength. Because you cannot keep them there. Those people or your competitors will beat you up in the market if you keep them as your weakness. So you need to state them down. What are those things that you are able to do? And what are those things that you are not able to do? So that you keep on changing these factors that you are unable to do. whether in terms of money, relationship, communication, knowledge, and so on. You have them here. Number two, we have the external analysis. Under the external analysis, we look at the opportunities and the threats. So opportunities are from outside that can be an advantage to your business, but you cannot control them. I just want to make this one very clear to all of you, that when you talk about the strengths and the weakness up here in point number one, things that you can control. You can control them by yourself in the business. You can allow them either to get your business down, or you can allow them to make your business progress. While the external factors, these are factors that you cannot control them, but they can occur even by nature. So under those factors that can occur by nature, we have the opportunities and the threats again. There are those that can favor your business to go ahead. There are those that get your business down. So these are things that you need to analyze them before you start business. The last one, we are looking at the environmental analysis, and under the environmental analysis, we have the social, economic, regulatory factors that can affect your business. You have to list those factors down that you think can affect your business politically. In case when war happens, what do you think is going to happen to your business? Your business will also collapse. In terms of social, I think you will be in a position to bring people closer, and they will be in that point of purchasing your goods. Economically, are you strong enough to exist in the market? What about the regulation? What about those regulations that are imposed by the city council? For example, here in Juba, city council has multiple regulations that we need to cater for when you are running business in Juba. I don't know other towns within South Sudan, but in Juba we have a lot of them. So you need to be in position to analyze them, whether you can be in position to beat them up, or like to be in position to comply with them, and you have to state them down. Now, these are all things that will affect your business from within the environment, and we call them environmental analysis, and you have to state them clearly and you know them very well. We go to the next, that is the fifth component of a business plan, that is management and organization. So how are you going to manage organization? Now here, if we look at the steps, the key management steps that we are going to employ in that business, you have to look at their position and their responsibility. Are they fit to work in those positions? Are they capable of doing what they're supposed to do? What about their qualification in terms of education? Are they qualified? Are they experienced? People who has been doing that work for some time, those years back or even up to now, you have to put them here. In case if you want to get more staffs, you have to also know their positions, responsibility, qualifications, and so on. Some of these things to do with the responsibility, you have to clearly define them here, so that when they get in or when they get recruited, so that they know what they're supposed to do, when and where. Human resource practice, staff recruitment. Yeah, this is very important. We all know you need to recruit these staffs that will be. If you want to motivate them, what are you supposed to do to motivate them? Training and development. Are you going to offer some trainings for them so that they get well equipped with the job that they are supposed to do in that your business or in that company? These are things you need to clearly state. Reward and recognition. Are you going to reward those who are hardly working for the success of your business, or we are going to leave them like that? If you are going to recognize them and give them an award, you need to also state them here, so that when you have realized that one of your staff is hardly working for the existence of that your business, you have to be in a position to make sure that it also, or they all deserve that reward or recognition. And this recognition cannot be done by only a reward. You may just do that one by calling a general meeting to tell your people this person has done 1, 2, 3, and you really appreciate. That is the recognition. You recognize them among many. So that you work. The last one, we have staff appraisal. So we look at the staff appraisal now. Here we look at the performance of the staff. When they are performing very well, and if they are doing that, what can you do? You motivate them by organizing good meal for them and other things. That is what we mean under this. The next component, we look at the business operation. Now this one is the direct work. whereby you look at the product service development design. How are you going to design that service? For example, above there, we look at the chapati business. So we said our business is going to be making of chapati on the street. And if it is making of chapati on the street, how are you going, what could be the design of that chapati? We need to indicate it here. If it is any other business, restaurant and so on, you need to indicate it. How are you going to design your restaurant so that it attract customers? Or so that it will make them think your service is the best, or your products. Description of premises, your business premises or shop. You must clearly describe it here. How is it going to look in terms of and so on? You have to clearly state it here. And the ownership status. Are you the only person owning that business, or you are in partnership with other business? If you are a sole proprietor, you have to state it here. If it is a company, you have to indicate. If it is joint business, you have to also indicate it here. Products and services to be offered. This one, I think I explained it before. But these things, some of them looks like they are repeated, but this is how they are supposed to look like. Don't ignore some of them out, unless if I've mentioned that one or two you may ignore, and some of this we may indicate it later, or the 6 that are going to be given to you later, so that they are clearly indicate that you may include or not. But for this information here, they are necessary. You have to make sure they all exist there in the business plan. Machinery, tools, equipment, and other facilities required. In case if your business require machinery, tools, or other equipments, like for example, if you open a computer center for training, yeah, you need to state some of those things that are needed. Computers, you need printers, other things. You need to state them. All the machinery and the tools needed, state them here. The implementation now, procurement. What are you going to buy? Are there things that you need to buy? Is there going to be a repair and maintenance of those machineries that you bought for the running of the business? You need to indicate it here if there is going to be a need for that, so that you prepare for that in advance as the business continues to run. Future expansion. Is there any plan to expand your business now or in time to come? If there is a plan to do that, you have to also state it here under the future plan. What are you going to do in future? Are you going to, like, for example, if you are operating it as a sole proprietor, are you going to extend it as a company? Are you going to allow some shareholders to come in? When you have seen that the business is progressing well, you have to state them all here. Number 7, legal requirements. Under legal requirements, we look at the business name. Tax compliance is what I was talking about, the city council here in Juba. You have to clearly state here, if you have 7 employees, you have to know how much they're going to earn and how much they're going to pay as taxes to the government. In case there are labor laws that are applicable to the business you are running, you need to have them here. Which labor laws are you going to operate? The bylaws. If you have bylaws for that business, in case of large business, you need to state them. Even small business, you have to make a summary of a bylaw at least to help you and others. They can't be many. It depends on the type of business that you are running. The next one, we look at the monthly overhead expenses. Like in that chapati business, we have indicated and we passed through. We said at the end of the month, you may make some sales. But again, at the end of the month, we may say there are some expenses that may arise within the course of the month. And those expenses we have indicated here under the monthly overhead expenses. So that you know, in case those things occurs, you have to go and you pick from here. And those things should be things that you are very sure they may occur. And number 9, we look at professional and support services. Professional and support services. Now, in case if your business needs some experts, like what we are doing now, in case when you have started your business, and you may think at the end you need people who will guide you, people who will give you some advices on how this business will run. You will also be in position to state it here, so that at the end, your business plan will direct you. You have this. If the business is doing this, you need to do this and that. Employ these experts so that they'll be in position to help you where necessary. The second last, we look at now financial plan. That is the key part of the business, whereby we need to look at the preparational cost. This preparational cost, like for example, if you want to open a business, there are some printings and so on that you will do. before starting the actual business. So that expense is what we refer to as pre-operational costs, costs before startup. So you need to clearly set those costs down, because at the end, you are going to cater it as part of your business expenses. Working capital, actual cost for running the business, that is what we call working capital. So the production cost itself, you have to include them all, what you need to buy in order for that business to run. You have to indicate them here. We look at the monthly cash flow statement. Project cash flow statement is what will up there. You need to have your cash flow statement for a month and even for a year. We have this one for the month and we have this one for the year. For the year, you make the summary for the 12 months and you file it together to make your projected annual cash flow statement for the year. You just project that this is how it is going to flow. But in reality, or in what is there on the ground, sometimes it may not go. But you have to make sure that it is there so that it will guide you. And the last one, under financial plan, we need to project our balance sheet. So I'm going to get it later. I'm not going to talk much about it. Now, lastly, we look at the appendix. Appendix depends on what you already have there. We have the brochures and advertisements, materials. You have to state them here. You create a page for them. Map and the photos location. Map and the photos location. You need to draw a sketch of your location, sketch map of that your location, and you need to take photos of that location and you put it in your business plan. Copies of lease and the contracts. You need to get this thing, the lease and the contracts. You need to make sure that in case you have contracts with other people and a lease, and lease for machineries and so on, make sure lease for land and so on, you state them all here. Or if you sign those contracts, you have to fix them within, upload them here. Company certification of registration. If you are a company, if you're operating under a company and it is a registered or sole proprietor, you need to make sure that certificate must be put here. List of assets available. You need to list all the assets you bought. This machinery I was talking about, the tools, equipments, and so on, you need to list them all here, the appendix. Copies of lances. If you have lances from city council and other authorities or governing bodies within the market, you have to also put them here. Then what will be the research and marketing results? The research you made before, in regards to the market, you have to also put it here. So all in all, my fellow audience, this is all about what we have for you today. I think our time was really badly affected due to the network breakdown and other things that happened. And I really apologize for that. And I believe if there are other things that later you need to ask or know from all these things that are explained, you may be in position to know. But before I give a chance to any of you who wanted to ask a question or put a comment, you will come in later. But first, let's look at the balance sheet that I was talking about. So on our balance sheet, we are going to play this video. We are going to play this video here. I hope all of you are listening clearly. In case of any problem, you may write a message and my co-facilitator will be in position to answer you. Sorry for the interruption made. Let me fix this.